Know your business structure. The first detail is to identify whether you are incorporated or a sole proprietor for your business, as lender requirements and policies are different for each one. We then look at how do you source your revenue. Are you on a contract with a company you were previously an employee for, or do you have a variety of clients? In addition, we need to understand how long have you been self-employed, what your business financials look like, and how you pay yourself from the business. Not everyone runs their business the same way, nor do they pay themselves in the same way. So we need to understand each individual specifics of their business so we can provide the strategies and opportunities that apply to that specific client. Many business owners who hope to qualify for A-lender mortgages do not realize the impact of reporting negative net operating income and or negative retained earnings each year. They become so focused on not wanting to pay taxes that they do not realize the other impacts this has when it comes to mortgage qualifying. In addition, they also often declare minimal personal income from the business, making mortgage qualifying with A lenders even more difficult. If your business shows it is repeatedly losing money, then it appears that you are a higher risk. In these cases, this is where I can advise you on the best mortgage strategies and options specific to you. My vision and purpose is that all people are living a life of opportunity. I am able to fulfill this through the conversations I have with clients every day. If you would like to understand the opportunities and strategies that can help you obtain a mortgage that will work best for you and your family, please reach out to me, Keith Uthe, and we can have an interactive conversation to discover the best way to help you get a mortgage and to get your future wealth by design rather than by accident. Taxes versus interest. It is important that we discuss taxes versus interest. Self-employed people most often have the plan to pay minimal tax by declaring minimal income. This is great for limiting non-deductible taxes. However, when it comes to mortgage financing, it is restrictive with A lenders due to the federal mortgage qualifying rule requirements. There may be an A lender option if your business financials meet some very specific criteria. However, most business owners are unable to meet those. We know that income taxes are not a tax-deductible expense in a business. However, at least a portion of mortgage interest is likely a tax-deductible expense for the self-employed. This is where the Alt-A and B lenders become the self-employed mortgage solution. They have greater flexibility in how they determine the qualifying income, and the rates are only about 1 to 1.5% higher than conventional mortgages. The borrower does require a 20% down payment or 20% equity in a property. However, it allows them to start building a future and have home ownership. To obtain traditional A-lender mortgage financing, we need to consider how much tax has been paid in declaring that $100,000 of income. In Alberta, that would be nearly $31,000 of tax for just 1 year. And you need to declare that income for 2 years. So that's $62,000 of non-deductible tax. Using a B lender for a mortgage of $400,000, the 1% higher interest cost is about $8,000 per year based on current interest rates. And a good percentage of that is likely tax deductible, effectively lowering the net interest rate. Taxes on the $100,000 of income will never go down. However, interest on the mortgage has the chance of going down and allowing you to save even further. So when you consider that you can declare less income and pay less tax with the alternative of paying a little more interest, that can really help you and your family with being able to grow into a home and buy a home that you didn't think was possible. Less costly borrowing options. Often those that are self-employed need an injection of funds into their business for any number of reasons. We can help them find business or equipment loans. However, these usually have the highest interest rates. While this can be the best solution in some situations, it is not the only solution available. From a long-term wealth perspective, the Smith maneuver can work with the primary home and business to open a whole new world to less costly borrowing that can be injected into the business and receive personal tax deductions on the interest for those borrowed funds. Often business owners are required to provide personal guarantees on loans for the business and end up paying higher interest than they would if they considered other solutions. If the business owner borrowed the money personally and then they injected those funds into the business, the interest on those funds would be tax deductible. This is where working with a team of professionals is so important so that you get unique strategies and options specific to you and your business. I'm Keith Uthe, professional mortgage broker with Mortgage Alliance Enrich Mortgage Group, and I want to elevate your knowledge of the mortgage market and process. Contact me at 403 614-8843, or email me, keith@enrichmortgage.ca. I can demystify the mortgage process and help you to make informed decisions and navigate the path to financial freedom.